Please welcome Patrick, Tyler, and Dale to the S4 main stage.
All right.
Either way is fine. I'm sure we can tough it
out.
out.
Get the hot seat.
So, welcome back from lunch. We have a really interesting panel for you today. As most of you know, since you follow this industry and you're here, that the venture market and the angel market for ICS security firms has never been hotter than the last 2 years. We're seeing dozens, 10, 20, 30 deals a year where we used to see maybe 2 or 3. So we thought we'd bring a couple of people that invest in companies as their main roles and main jobs in to talk a little bit about what they look for and what they do, and we'll get into a lot of different areas. But I think the best place to start, maybe Patrick will start with you, then Tyler, is can you just tell the audience what are the goals of your fund? What does success look like in an investment that you make?
So ClearSky is a bit of a unique group. We are a $300 million fund that invests in security only. We have a separate fund focused on the power and technology sector, which actually pulls us together into the ICS space. Our largest limited partner right now is NextEra Energy, which is better known as the parent company of Florida Power and Light, helping Florida recover after hurricanes really, really fast. They did a great job. And so we have kind of like a first and best customer or partner there, especially when looking at the ICS space when working with them. What we're looking for in companies, quite frankly, obviously we're looking for a financial return. That's extremely important. But because of the relationship we have with FPL, we are looking very much towards the ICS space, and especially in the context of the power industry, what we can do about it. Personally, in my background at Kaiser Permanente, I really learned to appreciate the need to secure devices, period. So, story here, about 10 years ago or so, I hired a team to really do a study, how resilient are medical devices to attack and what could the consequences be? Long story short, yeah, you can kill people off the network, basically. So it gave me a heightened sense of awareness around there is something that's coming down the road, which is the consequences are no longer going to be just financial or privacy or abstract consequences. The consequences are going to be people dying, and that's pretty important to me as an individual. So I have a strong personal interest, having been in security for over 20-some years, to really be part of that and to really help fund transformative companies that solve some of these really tough problems.
Okay, well, Tyler, what is Shell Ventures looking for? What's their win?
Well, first, thanks for the opportunity to be here.
Sure.
Appreciate it. It's extraordinary what you've done with S4, so I'm happy to be here. And the 13-year-old punk rocker in me also thanks you for being able to perform on the Fillmore stage. So I'm pretty happy to be here, Dale. So describing what Shell Technology Ventures is to a hyper-technical audience like yours is going to be a little bit difficult. So I'm part of what Shell Technology Ventures is. You might hear it referred to as Stevie. We're the corporate venture arm for Shell. And it's probably easy to understand, or easiest to understand if you think about two buckets, two relatively large buckets of capital. The first bucket we call the new energies ambition. So Shell is charting the course towards a new energy future, and our investment strategy and our ambition there is to fund technology companies that are in the new fuels business, mobility, connected customer, renewable power. So this bucket of money is used for making investments to accelerate value from this uncharted territory for Shell. So to create new core businesses for Shell. And then there's another bucket of capital that we employ with our core businesses. And these are technologies that can help us drive value and performance today. So those are the two buckets, and they have a different performance metric. So we look at the front end new energy investments a little differently than we look at the technologies that we will deploy in our core business. And to kind of tie ICS security into that, you kind of have to sit underneath those buckets in these matrices. And I focus a lot of my time on what's called unconventionals, the shale business in North America. And you segment that out into value chain segments. There's drilling, there's completions, there's seismic, there's production. And all of those have their own technology advancements that we look for, whether you can complete more effectively and offer us a reduced technical cost of 20%. So we'll find technology companies like that. And those are kind of vertical plays. underneath that we call the kind of connective tissue. And those are the digital investments, advanced analytics, the machine learning algorithms, the industrial cybersecurity, software-defined networking, containerized applications. So how do we transform our core business with these horizontal technology plays? So we look at those buckets a little differently, but like I said, industrial cybersecurity is a core element to enable this digital transformation we're trying to achieve in our core business.
And then in the new technology bucket, how far out do you look? Are you investing in something that's got to be real world in 3 to 5 years, 7 to 9 years, 6 months? What's your time frame?
Well, we typically use the McKinsey view of what's called horizon investing. So the first horizon will be kind of 1 to 2 year return on value for deployment into the business. For the new energies business, there's not a lot of economic understanding of what these business models look like. So we're looking at maybe horizon 2 and sometimes even horizon 3. The Shell Ventures group doesn't necessarily go too far in the future in terms of our investments, maybe 5 to 10 years out. We will, but we have other groups in Shell that are responsible for that. We have groups like we're called Game Changer and Shell Technology Works that are on the cutting edge of 5 to 10 to 15-year advancements. We're looking for technologies that we can see how to drive value in horizon 2 timeframe.
And then as you're doing that, are you, and it might be both, but which is more prevalent, are you saying, based on our crystal ball of what we're going to need in 2 to 3 or more years, this is a technical innovation we're going to need, and then go out looking for companies that have that? Or are you just bringing things in and saying, wow, that's a good idea, we should fund that?
Yeah, as you can imagine, Shell has a ton of different groups, individuals, and relationships that are kind of designed to bring trends, new technology opportunities to us. So we're not ever, we're awash in new ideas and new technologies, but we actually try and flip that around and start with our business. So what are the core challenges today? What are the trends emerging in the industry that we may see needed optionality? So if the economics change in the crude oil price, what will a business need to do to be adaptive to this new market condition? But it all starts with what the business pain, the business challenge, the strategic objectives, and how they contribute value to the bottom line. And then we will go out and curate that list. So the list will always exist, and we'll always want to spend time understanding to keep our finger on the pulse of what's happening, technical trends, market trends, even things like cultural imperatives that are different around the world. So
yeah, we have a similar filter. When we looked at what are the large trends in the security space. Just in security, there are over 3,000 some odd companies out there screaming for attention. So we try to focus ourselves, we try to be strategic and focus on areas we think are necessary and transformative, like, for example, the managed services space. We think that's one of the few ways that security is going to actually scale, focused on addressing technologies that drive automation, reduce the need for humans. Again, back to this, like there's an incredible shortage of the number of people that are available to do these jobs and driving better and faster results, et cetera. So we have a number of investment theses that we align to, but also what we see is kind of like opportunistic investments. With so many companies out there trying to solve interesting problems and being relatively well connected, we see these amazing opportunities just to jump in. So it's not exclusive, and like you were mentioning the McKinsey model, we have a portfolio approach as well, both in terms of the stage of the company and whatnot, where we try to spread ourselves, some very early stage investments, and then some later series A and B where it's more of driving growth for these companies.
Patrick, do you have, so you mentioned Nextera, and so do you have a mission to help them meet their needs sort of as Shell Ventures does, or are you really focused on ROI? When you invest, where can you get your best return?
I would say we're going to be focused on ROI. So there's no agreement, for example, that we're going to do X, Y, and Z for Nextera in the power sector. But it would be unwise for us to ignore them as a resource because we have access to their engineers and to their staff. They give us office space in Florida to use. So we have a very close relationship with them. So we try to help them solve some of their problems that they're dealing with. And obviously, if we can leverage these deep skills, engineering skills, at the largest power company in the world to help us make smarter investments, everybody benefits.
Well, certainly if a company like that is interested in the technology, that makes it more appealing for an investor because you have a potential large customer to stand behind it. But so Nextera or any electric company, oil, gas company, manufacturing company is going to need a lot of things beyond security, right? I mean, that's one small slice. What was it, Patrick, that has you looking at the ICS or IIoT security market? Why do you think that's a place where there might be good investments? Or if you don't think it is, why do you think maybe it's not a good place?
So maybe let's have some fun. I'll take the contrarian approach.
Right.
Why don't we go down that rabbit hole here about why it may not be great? Well, number one, I think the good news is I think it is a fascinating space. There's a huge amount of demand for it, but it's a lot of activity happening. I'm tracking almost 30 companies in the space doing interesting work on detecting and mitigating ICS-type risks. And the challenge is that there's almost too many players in some way, and the stories aren't very differentiated. And what I mean with that, having talked to many of these companies, I try to understand, well, what's your technology platform? How do you differentiate, et cetera? And most of them come down to a very similar formula. We have something that's sniffing packets on the wire. We have logic that goes in and via reverse engineering and whatnot decodes these old proprietary ICS protocols and gives us access to the underlying data and what's happening on these devices via this network view. And then we have a variety of analytics and rules that we can apply. Definitely almost like known attacks are detected based on explicit rules, or boundaries that are exceeded can trigger on that. And then you have the ubiquitous and security, artificial intelligence and machine learning based on some degree of baselining, buzzword bingo time. Yeah. And then we send out alerts basically, and you guys get to chase it down. So unfortunately, because we've seen that pattern, that technology pattern over and over again in the companies that we've talked to, then we have to rely on, okay, well, who has the deep technical expertise to tell us that company A is better than company B? And in many cases, that would probably be engineers at customers that we would talk to. But so it's a bit of a chicken versus egg, but they haven't necessarily been deployed very broadly. So kind of that signal coming back to us on who the strongest players are in that space, it's not a very strong signal. So it's tough for us as investors to look at the space and basically say that even with access to resources like Nextera's, who are the winners? We want to bet on winners. We're not the type of fund that is going to go and do a scattershot approach and accept that a number of companies are going to go to zero in valuation. We really want to make sure that we're diligent about our investments.
But so it's kind of funny. You've been in this, Tyler, business for more than 10 years, and we've seen these market surveys, that always show you the market size in 3 years, which is always this gigantic,
billions of dollars.
And from where we are here, how are you dealing with, just even the decision that there might be a market here, because it's those numbers are just someone grabbing things out of the sky saying it could be this big. People seem to care about security, so we'll give it a big number. Are you using any more sophisticated metrics than that?
No,
I hope.
I mean, we do look at the market overall, but we also ask ourselves, how can this problem be solved? And are these companies, are we looking at them, are they really features, or are they true platforms and products that are going to last for a period of time? And what I mean with that is, when I was a CISO, it's like the last thing I want is yet another box that's going to sniff network traffic. That stuff should be consolidated in a meaningful way, and then you have logic that covers that single tap thing. And right now, I think a lot of the companies we've looked at, they feel feature-ish to us, meaning that as we see, especially the larger trend of convergence between kind of the OT networks and the IT side of things, you're going to want to see a consolidated system that can basically have the functionality to look at the ICS space and provide significant value there if we stay to the network deployment model there. And then we look at, well, what are the companies that are currently great on the network side? And in our portfolio, we have a company, ProtectWise, who's actually here, and they already have a very strong platform at the network layer, and they have the opportunity of potentially layering in some of the ICS-specific logic over time, and they have already. So from an investor perspective, that feels it's like all of a sudden you have a platform, you have a comprehensive product, it's aligned to a larger technology trend that we're seeing, So we didn't feel compelled that we have to make very specific investments right now. And by the way, anybody out there who's like, please come confront me on some of this and challenge me and update me if the products have evolved. I want to approach this from a certain sense of humility. It's a complicated space, and we're always trying to learn what the right bets are to make.
So, Tyler, if you can maybe spin off that and just talk about how you decide whether an investment is worthwhile. But I also am curious if you invest at all. A term Hank Kensington, I heard first from him at DOE, talked about market failures. Yeah. That DOE invested in market failures where DOE thought something should be there, was necessary, but the market wasn't going to get it to where it needed to be. Do you also invest in those, and what kind of metrics do you use in your investment decisions?
Well, first, I'll echo what Patrick said about looking at the companies that exist today. We have a very similar lens, and quite frankly, the movie is not different than it was 10 years ago. The same amount of venture capital money was out there available to a smaller bunch of companies, and I was one of those companies, and we took advantage of hyped up valuations based on CNN articles. And quite frankly, end users that didn't know what to do and would make a couple $100,000 available to small companies that then turned that around and said, this is my growth. But the companies like end users never really had a long-term strategy, so their budgets weren't really built in for sustainability. And I don't think those economics have changed much. The difference is, as Shell, we're a strategic investor. So we look at ROI and the economics of an investment with one side of the evaluation criteria, but the other side is how can we benefit Shell? So to tie in your market failures, we will invest in companies that we don't see a strong ROI, or maybe it's there, we don't have confidence in it, or even some cases we just don't trust it, but we know the return to a Shell as an asset is valuable or huge, or there's a corollary and it's enabling something else. And you and I have talked for the last 5 years about how we see security as an enabler to this digital transformation. We don't think unmanning, remotely operating the field of the future is possible without building security in. But we won't be investing in a company for security's sake. We will say, where does this fit in our value chain? By investing in this technology or this service, is it going to unlock a new capability of value for us? Can we now remotely operate more reliably? Can it improve the robustness and the cost of accessing the plant remotely for our supply chain? So we will make investments in technology companies that are purely ICS oriented, but if their model or their pitch doesn't reflect an understanding of our business, if they don't know certain things like partnering with our supply chain is pretty critically important, otherwise good luck. Those things have to come out in the pitch for us to evaluate if there's strategic value. If they just send us their cap table and what they're looking for, it's pretty easy for us to say, yeah, we've seen this, it's just like the 7 other companies. And at some point, Shell, we don't have unlimited resources, so we do have other opportunities to go after, and we're not just a niche cybersecurity investment firm. But they do exist, and that's why they're getting funded. There are companies that are purely making bets in this space, as Patrick said, the scattershot approach. That's one model for venture capital, and some will win because of the pure momentum. And there are Series B companies or venture firms out there that will wait for that next round. So it'll be perceived growth, but the question we'll always ask is, are the customers buying it, and are they building it into their long-term capital plans?
So that's, yeah, no, that's great. But I mean, if we get to something that may offend a portion of the audience here, because there's about 25 companies going after the market that you described, Patrick. Yeah. And one of the things maybe you can describe how your brethren approach this in the VC or angel world. I'm always curious how so many of these companies can get funded, because we know, in the best case, maybe 3 or 4 of them will be successful, but there's still new ones coming up. Every couple of months there's a new company. So why would a venture company want to jump in such a crowded pool? Why does that happen? Is there some philosophy behind that?
I mean, we look at a number of different dimensions, starting with the team. How great is the team? And in some cases, we'll make very early stage investments because the team is incredibly proven. We know them at an individual level. We've seen them operate at other companies and whatnot. So they get the benefit of the doubt because they've proven themselves in some cases multiple times to be very effective. Then, of course, we look at the market. It's like, what is their go-to-market plan? Is the market ready for what they're doing? Then there's the technology view. It's like, what is the differentiating capabilities? So we look at a bunch of different angles, basically, on the company, and sometimes one dimension just really pops. And in the areas where the company may be weak, at least at early stage, such as the go-to-market plans, we ask ourselves, how can we help them? We're very active investors. We don't just provide money and then back off. Our focus is, like I said earlier, we're going to make relatively few bets, but we're going to make very high-quality bets, and we're going to invest ourselves into helping these companies out. So we do the full, almost like a SWOT analysis, and figure out, given the current state, how can we apply ourselves as investors to help them break through some of those weaknesses.
But I also don't understand it either. So some of the bets that are being made and investments are being made, I can't see why. Other than traditional venture capital funds have to close, they have to raise more money, they have to put portfolio companies out there in thematic areas that might not win, but give them access to new relationships and exposure to new companies. So there's more tactful activities that happen behind the scenes for some of these investments. The other side would be, as Patrick mentioned, there are parts of the value assessment criteria, like management team, market opportunity, that are pivotable. So if you look at an assessment that you think, wow, they don't know what they're doing today, they need capital for something that we don't think is going to fly, but they're capable of pivoting efficiently without having to raise more money or introducing a down round. And if they're coachable, or they have a customer like Shell who can give them some deployment capability and some customers. So again, it'll be an artful, I believe most of these investments will have some deeper thinking than just throwing money at an anomaly detection company. And, they should have asked the hard questions, and they could have come to us and realized why we're not investing in certain areas. But there are some smart people on the venture capital side that are doing things for different reasons than what you might see at first glance.
And then you have the periodic disasters such as Juicero, where you look at it and you go, what were these people thinking? And if you don't know what Juicero is, Google it. It's a very interesting, what is it, $500 juicers?
Yeah.
Well, you're always going to have those failures. I think what's so interesting in the ICS space is, and maybe this is another area to talk about, is it easier, so there's this class of product that is somehow related to detection and response, right, that is out there, and has some asset identification. It's kind of things that we're looking at the ICS Detection Challenge. Is it easier for a company, let's say we had 3 or 4 people in the audience that wanted to start a company, and they're really brilliant people, is it easier for them to put together a business plan for a crowded space like detection and response, or are they better off saying, here's something new that no one else is doing? Which one is easier for them to get the meeting and actually get the funding from people like you?
Probably the latter. The other challenge we have is that the buyers in this space, they tend to be large industrial companies, very long sales cycles, potentially big contracts, but it's going to take a long time to actually have a product that's ready to sell into the space. It's a low volume of signal that we have from a customer side of things, how these companies are going to perform. Whereas there are other environments where the addressable market, the potential buyer is, all major companies out there. We have a company we're looking at that enhances elements of Windows security. Well, your addressable market there is pretty much everyone versus a more narrow subset that we know, because they tend to also tend to be regulated industries, have much, much slower sales cycles. So there's risk associated with being in the ICS space, just because the buyers themselves aren't the most aggressive in terms of going out there and rapidly closing on deals.
I would say the same thing. The latter key messaging for us is having a company avoid using cyber, using threat, the nomenclature of it's bad purchasing decision. No one in the end user community wants to buy risk or buy cyber or buy threat. They want to buy value. They want to buy, create new value, reduce cost. You need to start using language of the end user, the operator, and even if it's just a translation, it could be cool new technology that is going to protect against the world's greatest threat that's coming down the pipe. For us, it's how are we going to unlock new value, how are we going to reduce costs, and how are we going to improve our balance sheet. And if you can tie in security as a service with some interesting new advancements. So you need to also tie into what's transformative. So if your company is coming to us today and selling us a box, and you don't have a storyline around how are you going to virtualize this in a containerized network, with software-defined services, those are things you've missed the boat. You're already trying to secure my PLC from 1995, and we might need that, but venture capital is going to be looking forward a little bit past that.
Well, and you and I have talked a little bit about this and some of your frustrations in the area of whether we should spend our time or encourage and invest in new companies that are adding security to existing solutions, or we should just jump forward 3 or 5 years and say, it's not going to be this way, so think completely new. I guess, how do you look at that personally, and how does that affect maybe your organization?
So that's more of a Tyler Williams view of the world than a kind of a Shell view of the world. And I think all the companies here have heard me and seen me at their booths just berating them with, we only have $1 to spend, and we need to be securing and building in capabilities for our next generation of technology. We have to. Otherwise, we're going to be in the same situation 10 years from now when our wireless industrial networks of the future are all insecure by design. So I want to be able to say we can do both. So the corporate response and any end user is going to say we have to do both, because we do. But in reality, we have scarce resources, scarce talent, and scarce focus. So I'd like to see, at least branding-wise, having companies think about, yes, we can protect today. We can keep you resilient and improve your bottom line today with new capabilities. But as you transform your business and you go more wireless and you go more software-defined and you create new business models that don't exist today, we're building that stuff in with you. Unfortunately, that takes more investment than a $5 million Series A with 16 hackers in a room. That's business model improvements. You have to have people who have run businesses, integrated businesses, sold businesses, have good boards, and just understand how this industry works. So I haven't seen it yet, but that doesn't mean that the messaging from us to the community can't resonate with some, and maybe they'll listen, and hopefully it's good advice. But
I totally agree. I think there are the practicalities around what are you doing to solve today's problems on the legacy infrastructures and whatnot. You have to be able to demonstrate that you can pull revenue in via that. But looking forward, I think, is incredibly important. And we've seen some interesting companies that are looking towards maybe software-defined networking, for example, as a very flexible way of implementing controls in the ICS space. And some of these things, they're maybe a little bit too far forward-looking. Again, there we kind of get to the problem of how many customers have actually shed some of the legacy, so that they have the base investment in SDN technology. They can apply some of that. It's tough. Then to get a signal on the market, they may be a little bit ahead of the curve. But having that vision, I think, is incredibly important. How you move beyond kind of I have a network box that's doing detection into something else, especially into something that's actually doing prevention.
They also have to be willing to let the square peg not be fit in that round hole. So when I was in my former life as an entrepreneur, I wanted nothing more than to sit with the customer and understand what their needs were, but I also had a box to sell. And at some point, as an investor, you want them to keep selling more. You need them to keep selling more and more of those boxes, otherwise your return on investment does nothing but go down. The problem is, as an entrepreneur, you need to be saying, I need to kill this product if it's not what the business wants, and it's not going to enable something in the future. So there's a weird dichotomy that, again, you need more capital, you need to think bigger than, I've got this tool, it was awesome in 2018, but in 2019 the economics changed, or a new regulation came out, and you can't pivot from a box, or you've only hired and spent all your money on a very specific threat agent expertise. I hired a bunch of NSA guys. Okay, great, but what about people from Asia Pacific? Or what about people who know how to do business with oil and gas? You need to think about all those things. And as a first-time entrepreneur, which a lot of these companies are, it's not easy.
Well, and you came at this from, you've been on all sides, right?
Scars to prove it.
You've raised money, you've sold companies, now you worked for a large company, now you're investing in smaller companies. Is there...
I highly recommend that path, by the way. Do it the other way around.
Is there, I guess, and that nothing is an appropriate answer if it's right, but is there anything unique about the ICS or IIoT security market when it comes to evaluating, teams that come in and pitch you? Or is it just all the same factors, who they are, what their differentiators are, their go-to-market? Is there anything that you see that's different in this sector than all the other deals you look at?
I would start with industry knowledge. I mean, many other technologies, you have a well-defined technology base that an engineer can research and they can be competent. In the ICS space, because there is so much of a need to look at all of these legacy systems and protocols and whatnot, that having somebody who actually has that knowledge as part of the team, who knows how the industry works, who understands the technology that the industries rely on, and the security nuances, actually having done operational work in that space around security. I think that very narrow existing security foundation is extremely important, and frankly, there aren't that many people that have that foundation. So they do end up founding companies like Dragos.
Yeah, I think most companies in this space will start with a similar formula, a rock star of some sort with name, credibility, or reputation in the industry, and they'll build something that they had as an idea in a former life, and they'll try and create a business. But having seen that movie before and having realized that at the end of the day, the most valuable person in that business was my CFO or my VP of sales. It wasn't myself and my partner who were at these conferences building street cred with this community. This is a business you're talking about. So if you want to grow it and make a ton of money and return value to us as investors, you have to have first of all, you have to let go of what we call founderitis, and I had to the hard way. You're going to need to grow a business that's beyond the sex appeal of I can hack these systems. And that's different than any skill set that an entrepreneur has at this stage. It's not a bad thing. I mean, and we did it, and as long as you're learning and you're adapting and taking those messages seriously, then I think you'll be successful. You'll ride some wave of some sort. You might crash and burn, but that's always a learning opportunity as well.
The go-to-market
of the business, right?
The go-to-market is incredibly important. If I think about where we spend time recruiting individuals for our portfolio companies, when we actively get involved as investors in recruiting, it's almost always around chief revenue officers, VP of sales, on that side, business development, because that's generally where you have to complement the early stage companies. It's not about the technical vision or the ability to execute there. They can do that. It's all around how do you actually get in front of customers, close the deal, deliver, and support them.
Right.
It's funny though, when you were saying, and your CFO VP finance thing was interesting too, but when you were talking about industry experts or people with industry experience, I was wondering if you were going down the road of the end users. But like, is it important that you have, if you're going to sell to the oil and gas field, that you have someone who's worked in an oil and gas company and knows what their pain points are, as opposed to someone like me who has just done consulting for them, but I've never been responsible for a P&L in an oil and gas company or making a plant run.
But you've waited a year for us to pay you. You've done business with oil and gas companies. We have certain characteristics that are just how you do business with us. So you don't necessarily have to come from an oil and gas business to sell to us or any other sector for that matter, but you have to have that experience. And if you don't, your any estimate you put in front of an investor is going to be 3 years out. And the other thing you mentioned here, about understanding product market fit and getting close to the customer, you have to have experience with the ecosystem as well. So selling to a Shell or to any other oil and gas company is one thing, but you have to sell through companies a lot of times. You have to have relationships with the Honeywells, the Schneiders, the Emersons, the Yokogawas. If you don't, you're going to hit so many roadblocks doing business with us, and that's just going to do nothing but delay your success. So knowing that ahead of time and building a team that can execute on that model, and I don't think that's different than other industrial sectors. I mean, oil and gas has a reputation for being a certain way in doing business with us, but power, I'm sure, is the same. And
other advice is make sure your customers love you, because the one thing that investors will do is they will look at who are the existing customers, and we will back channel into those customers, and we'll ask them, what do you really think about this product offline? And we had one company come to us, not in the ICS space, and the guy basically said, I have no idea why they listed me, because we're going to rip this damn thing out. And I was like, okay, great, we can start our diligence process right now.
Can I add on to that though? Make sure the right customers love you, not the right companies, but the buyer. So it's great when you get to show up at a conference with somebody who has no budget, but is championing security inside. You know, as an investor, I want to know, do you have the person responsible for the P&L as your champion? So it's the right message, but for us, we need to know that you've gotten in the organization at the right level. Again, it's fun to be a part of a trend and be a part of a good opportunity, but the economics will always tear your company apart if you don't have the right model.
Well, and let's kind of, as we're coming to the end here, let's talk about the end. So the exit. It's very interesting in this space, especially now. I mean, we're probably in the field we've been discussing most because it's most active. There's probably going to be a bloodbath in a couple of years, right? I mean, 25 companies are not all going to be successful. On the ones that are successful, is there any preference? Do you like to see them raise additional funding and grow to a certain size? Do you like to see them be acquired? I guess it depends from a pure financial standpoint or from a market standpoint. Yeah. What are your preferences?
Well, first of all, I think every company, if you talk to a CEO, they'll always tell you that they're in it for the long term and they want to build a viable standalone company, whether that's realistic or not. I think, you know, when the market is very crowded, and kind of what I mentioned earlier, some of these companies feel more like they should be features as part of like larger platforms. I think we can see consolidation. It's not about companies losing. It's from an investor perspective, I'm not going to get a 10x return on this company. It may be a 2 or 3x return because it's going to get acquired by somebody else who has a dominant market position as a platform player or an integrated security player who's going to integrate these capabilities. So I'm not necessarily pessimistic that these companies will lose, quote unquote. They're just not going to have phenomenal exits, the vast majority of them. They are going to get integrated and the technology is going to live on as part of a larger platform.
Yeah, I mean, similar to us, we need an exit that's tangible. We need to understand that there's going to be a return on the investment from a corporate financial venture capital group. But at the end of the day, we don't really control that exit. So a lot of times we don't see the preferred model play out where we like this company and what it has. Quite frankly, most of the time that differentiation is vendor agnostic solutions for us, and chances are that's going to be bought by one of those vendors that we wish it remained agnostic to. That's just the name of the game. You know, at the end of the day, these companies, these large automation and control system suppliers, are going to have to continue to offer us differentiated services, and they're not necessarily as lean and agile as these startups. So it's kind of a nice ecosystem of startups integrated into these bigger organizations that can do business with us. Problem is that just increases the price to Shell. And then that's okay. I mean, at some point, we're going to have to just be okay with that fact. But the other, just one last thing on that, the exit values, for those of you in the audience who are running, they're not as high as you think. You know, make sure you build that into what you think the world's going to look like. Are there unicorns going to be building up here in the ICS space? Probably not.
Unicorns? Probably not.
Probably not, right? So understand where your model ends and build a company to not just go that direction and be pivotable also elsewhere, but you know, big organizations have a cap. They buy companies between $40 and $70 million, and that's, you have to build an economic return backwards from there.
So there is something that's happening which is like a virtuous cycle. So if a company goes through this acquisition, what I more often see than not is that the founders that have the creative energy, they're locked in, they stick around maybe for a year or 2 years or so, whatever the lock-in period is, and then they spin off and they do another company. And this is where I mentioned earlier, one of the things we look at are the teams, exactly. And then, so it's like if we've seen the team even be moderately successful, we've seen them learn from their first company experience and they've sold it and it's integrated as a feature, now they cycle back and do something else. That's a great place to be. So as an entrepreneur, if you're thinking about this strategically, it's like moderate your ambitions about taking over the world, but understand that the relationships you build with the investors, the track record of the first company, it may not be the greatest one in the world, but demonstrate that you're in a learning cycle, and I think you'll have investors beating down your door for the next company.
Yeah. And that said, tempering expectations in terms of exit value is just a piece of information. I mean, we're here to drive this next generation of growth, and we want these entrepreneurs to be successful. Otherwise, we're not successful. So, any negative tone that we see here is just fuel. I mean, I remember when I first started, I would put my business plan in front of every VC I could, and they threw it I can't even tell you how many times I got thrown back at me, but it was great to see how that gets to evolve, and the same thing I think this group should be doing here.
And have you seen are you getting many, quote, IIoT pitches? Are you getting people saying we have something that, not just pure, I guess it depends whose definition, not just pure IoT that really doesn't have anything to do with classic ICS, but extending the ICS out through a variety of devices or applications or such. Are you getting a lot of pitches in that area, either one of you?
I mean, we're making investments in that area, and some people in Shell, some departments might see that value in the next year. Others in the engineering community might think that having an enterprise platform ingest traffic directly from the instrument. You ask an engineer how long that's going to take to be real, they might say 10 years from now, just because the intricacies of how that happens.
Are those, before you answer, Patrick, are those people, are they different than the community you see here at S4? The people that are making those pitches? I'm wondering if there's an IIoT community, an ICS community, and they haven't.
They are very different. I think most of the companies here will have heard from me. You need to find a way to incorporate that language, because for us to invest in a large analytics platform to optimize production equipment in real time and as a service, security has to be built in, and they're not talking about industrial cybersecurity. They're the next generation knowledge platform for the industrial space. So somehow collaborate. I wouldn't say the sectors have to be looked at as the same, because there is still a differentiation around securing a critical operation infrastructure as opposed to IT. But generally speaking, the machine learning, analytics, drones, augmented reality are coming from the enterprise companies, and that's they have to. They're $100 million Series A and B companies. So.
And then just maybe what are you getting pitched for IoT things?
For us, again, we're a specialized fund focused on security, so we keep our eye on the evolution of that space, but we're going to very narrowly invest our time in security companies that may be solving some of those problems that are being generated.
Yeah.
Well, maybe just to close, is there anything you think this audience needs to know that we didn't talk about what you do or what you're looking at?
I would say hopefully we weren't too negative here. We're trying to provide, I think, really frank input of how we're looking at this, at the world here. I think there's still phenomenal opportunities, and never lose sight of the underlying mission. I think I started with it. It's like, if we don't get this stuff right, people will die, period. So it's really, really important from a strategic perspective for the country and for the world as a whole that we figure out industrial control security.
Yeah, on our side, to close, I think I mentioned initially when describing kind of our fund structure, bucket one, which is the new energy future. We're all going there whether we believe it or not, or whether we think it's going to happen tomorrow or not. And that new energy future impacts more than just us in the US. It impacts the entire world, and we don't know what that future looks like, but it's all digital. So if we can't encourage the security community to move away from this granular view of I can detect these threats on a current construct of an industrial network, and not force them to think about what does this new microgrid in Africa look like when it's now connected through either blockchain or some LEO satellite technology to an operator somewhere else. These are all things that are happening, and security has to be built in. So, and Shell's championing the way to get there, but we want to do it so that that business model that we see ends up being reliable, predictable, safe, secure, and so forth. So I would encourage everybody here to shoot for that future and look at that value as opposed to more boxes on my network. And I have 100 really frustrated engineers with 25 more screens to look at every day.
I need to get you a t-shirt that says I love boxes.
There you go.
Nice.
Okay, well, thank you, gentlemen, very much.
Thanks, sir.